and welcome. My name is Slesh Chen, and I'm a chartered accountant in public practice. Today, we'll be talking for about 1.5 to 2 hours, depending on the feedback we get from you guys. Format of the day, it's pretty casual, so feel free to type in your questions, and or the team will try and answer them while we're presenting. And we'll probably stay back as well for about 15, 20 minutes after the presentations and try and answer your questions. We'll also run live examples of syndicate investing that we are doing and what we've been up to in the market recently and some of our recent pitches and examples. Hopefully, we'll try and entertain you for the next 1 to 1.5 hours or 2 hours. And the way to present, and it works well for both parties, is if we get you to interact with us by typing your questions and we'll answer them as we go. So just a quick background on me and who I am. So as I've said earlier, my name is Su Chen. I'm a chartered accountant in public practice. I'm also active property investor. I do a lot of buy and hold cash flow investing um, and land banking assets. Land banking assets are pretty much properties I bank and build houses on it later, more investment properties. I also invest funds in trading activities where you buy properties, do up, and sell them on for a profit. I'm a partner here at GRA, and I have 18 years of experience in business accounting and property accounting. Currently in our rental portfolio, this is with me and my mates, and this is our syndicate. We have over 60 rental properties in our portfolio, plus we are building 17 new houses, and we'll show you examples of this in a sec. Um, so you can see I'm a big supporter of syndicate investing, and this is something I promote, um, to other investors to do syndicate property investing. Just a big, quick background about GRA and who we are. We are a chartered accounting firm in Newmarket, and we specialize in business and property accounting, right? And we provide tax advice to our clients, specific tax advice to help you minimize tax or to protect your structures. We also do business advisory services where your GST returns, your PAYE returns, and any litigation work with creditors. Your financials are done, and any banking negotiations or anything like that, we'll do that for you. So that's our accounting services we offer. We have access to insurance brokers, and I'll give you access to that later in our presentation. We have access to mortgage brokers, and who can get you some good funding or restructure your current debt with other banks and get you better interest rates and cashback. We also do property education, so this is one of our biggest um, advantages of being part of GRA is you get access to property education and a list of people that you should be using when you're doing property investing. Our property education is basically free webinars we do for you. We do property school, we do development schools, and your portfolio planning. So if you've got assets that are performing well, we need to structure them in other entities. We'll do that. If you've got assets that are not performing well, we'll help you sell them. And we also do a lot of blogs, so you can always get latest information. And we've written books as well. One of our other advantages or other skill that we have at GRA is we do asset planning. So this is where we do customized tax advice for clients. Um, we basically give you asset planning structures to protect your assets. People who have business, family homes, they think they don't need to protect their assets. Well, you need to protect your assets. Like imagine driving a car without insurance, right? You'd never do that. So it's very important you protect your home. Your home needs to be in a family trust. There's no buts and ifs. I've always made sure all my clients have their homes in a trust. And if you've got a business and it's a good performing business, or it's got a lot of net worth to the business, we make sure it's owned by a trust as well. And we help you design wills and memorandum of wishes. In the event something happens, your family is protected. Anyway, this is some of the services we offer. So we are very a firm with a lot of skills and a lot of good people surrounding and a good supply chain to help you grow your business and your portfolio. GRA is well known to the banks, all the major banks. We work well with them. We've been working with the banks for over 25 years now. And so, when we do a set of books or tax returns, the banks actually like us. And we do a lot of presentations with banks as well. If you do, while we are presenting, if you'd like a free initial meeting with one of our tax consultants or with one of our consultants for anything, if you scan that QR code there, you'll get a form, fill that out, send it back to us. We'll ensure that you get booked in with one of us. Um, if you are a non-GRA client, we offer you a free 1 hour meeting. This thing's worth about $5.50 an hour plus GST, where we talk about asset protection, tax planning advice, and accounting services. Now, like I said, you can scan the QR code or you can email Amy and she'll book you in with one of us. Now, if you are a current GRA client, if you need some advice, feel free to fill the form out. We'll obviously get in touch with you and book you in with one of the consultants. A market update. So every for the last 6 or 7 years I've been presenting, I always like to do a market update and keep you informed on what's happening. Now, something I've noticed in the market is discounted properties are hardly available now. And the reason is the market's shifted. So it's come out of the bottom and stocks are selling. Now, obviously, if you want 2021 prices, you've got to make sure your stock is shining and looking good, right? But houses are selling, the buyers are back in the market, interest rates are coming down. Now, 4 months ago, I presented, and in my presentation, I said interest rate will come below 4%, and it's definitely on its way. Recently, we had SBS offering 3.99% already. So we think interest rates are going to be definitely below 4% within the next 4 or 5 weeks. Now, most of the bankers are telling me when the OCR announcement happens tomorrow, wait till 2 weeks for the best rates to come out. And when you have the best rates come out, you should obviously shop around with other banks as well, and see who can offer you the best rate. Um, what we've also noticed in the market is there's lots of new buyers qualifying for home loans, and we've noticed that credit is getting easier. So it's easier to obtain a loan now compared to last 12 or 24 months. And part of the reason is because the bank is also trying to work with the Reserve Bank and the government to stimulate the economy. So they're making credit available for a lot of people. Um, like we said, houses have started selling again. So there's a lot of buyers on houses. There's multi offers every week. You hear from real estate agents. Now, one thing that I've noticed, property traders disappeared over the last 24 months. Property traders are back in the market and they're really fighting for stock at the moment. There's a lot of property traders chasing stock. So if you are a property investor and you're thinking about getting into property investment, you should definitely get into it now because property prices are on their way up. Now, international students are back in the market, and this is good. When international students come back, apartments get rented. You'll have a 2 bedroom apartment, 2 or 3 students will hire that property. Houses get rented, right? And you're going to see the shift coming into this. Um, so it's good, and I hear the international students are pre-COVID levels, so that's fantastic. And international students actually stimulate our economy a lot because they come here, they pay international school fees, they pay a rent, and they spend a lot of money in the economy. Something we've also noticed is renovations are getting expensive. Material costs are up there, like something Thin and I were talking about earlier today. You know, 10 years ago, you could do a renovation on a South Auckland property for $60,000, a good renovation. Now you're probably at about 150 to 200, and yes, labor is cheap, but good labor is not cheap. We struggle to find good labor and they're not cheap because good labor is always hired out. They've always got work. So, and something we've noticed, material prices are definitely up. They're not coming down. And like anything else, material prices is going through the roof. So remember, guys, during this presentation, you type your questions in. I'm happy to answer them, as we go. Now, this is a very interesting photo I've got here. Um, I took the photo on the left. I was in an auction room in 2023 in February. So the photo on the left, it was taken by me. Now, October 2025, the same room. Okay. I've had an agent take a photo and send it to me. So that just shows you what's happening in the economy, right? And what's happening in the property market. Property market is back on. Now, I know people are reading the news report and they're saying property market's slow, etc. Now, news reporters are 3 months behind, right? The property market is in action. I've called real estate agents. I've called mortgage brokers. They all are busy, right? And not only in Auckland, in the regions as well, the property market is busy. So it's happening. Stock are moving. I also hear that a lot of experts are coming in. Um, you got Kiwis that have left 10, 15 years ago. They're all coming back, or they're buying houses back for their kids. And you got mum and dad trying to help families or their kids into houses as well at the moment, because if they don't, then our prices are only going to go up. Now, I can tell you this, I don't see prices dropping anymore. I just can't see it. I think it's done as saying property prices aren't dropping any further. So this photo is an example of February 2023, right? 2.5 years later, October 2024, full house. You can't even find a seat, right? So there you go, guys. I don't think we need to show you any more evidence that the property market's moving. Now, something about me and what I've done in 2007, I started into property investing. I had 47K in debt, and that was relating to my student loan and all of that. So back then, I started working as a graduate, and that was my net position, negative 47K. 2010, I bought my first property, right? And it was basically in the middle of recession in 2010. None of the properties were selling. And so I picked up a property for 300,000 in Pukekohe, and that was my starting point. Today, I have over $50 million in the property portfolio, well above $50 million in our property portfolio. And it's increasing every day. It's cash flow positive. So after all the mortgages, the principal, the interest, the rates, everyone's paid off, we are still running positive on our portfolio. And I'm quite excited about the new interest rates. It's coming down, which means obviously we get a chance to buy properties and create another wealth cycle. And I'm looking forward to doing that. Now, what we got going at the moment, 4.5% interest rate is cheap money. 4.5 is cheap. I've only had 4.5% or 5%, in very limited time of my property investing. I've always had a higher interest rate. So what we got now is cheap interest rate, which is going to bring more buyers into the market. People are cashed up. People have money. I've meeting a lot of people. They have a lot of cash at the moment, and 95% of my client base are multimillionaires, right? So what I'm trying to say to you is, if you're waiting for a deal, you got to get onto it now, because I just see property prices moving up and up and up. So that's what we have currently in our portfolio. I try and make $50,000 to $100,000 a month in our property growth. Whatever I do, I'll try and add value to our portfolio, or I'll try and buy discounted properties and add value, and obviously add that equity to our portfolio. So minimum growth that I chase is $50,000 a month. If you would have had me presenting 2019, 18, I always kept saying that I chase 50,000 a month, and to date, I still do that. So I try and chase 50,000 a month in equity. So that's where the portfolio is sitting at the moment. It's all syndicate investing. So I get together with my mates, and we buy properties together, and we all make profits, or we share the equity or share the profit together. So how I got started. So the reason I want to tell you how I got started is because if you notice that graph I just showed you, I started with negative 47 grand. And then how did I get into property investing, right? So basically, I built up my portfolio by teaming with my mates, with my friends, So over time, you have a lot of friends, you drink with, you party with, and then you start chatting and go, oh, we should get into property investing. And we used each other's help. So we used equity. Like, I went to my parents and I borrowed $60,000. And my JV partners did the same. They either used their income or went and borrowed money from their family members and started buying properties. And you buy properties with a calculated risk, and sometimes you go, okay, well, I've paid 50 grand too much. Well, it's okay. If you're going to hold it for 10 years, you're going to recover that 50 grand. So you always buy properties with calculated risk. We were chasing cash flow investing as well. Not only we were chasing equity gain, we were chasing cash flow as well. And we combine our resources, our skills, capital, and time. As a result, we could syndicate and we could go out and buy properties. I can tell you this, in 2010, 11, and 12, some months we were buying up to 10 properties a month because we were syndicating. We 3 or 4 of us, we had the cash flow to do it. So syndicating works, and you've just got to stick to it. It works, and you want to do it with the right people. You've got to trust. You got to have trust within the team members, because there's a lot of money being swapped around. We combine our income as well, so we could qualify for loans. Because the more investors you get in together, the more income you have, and obviously the banks approve your loan. We had to obviously prove ourselves to our lenders. That's quite important, because once you get the lenders' trust, they'll lend you money. They'll make sure they'll go to their credit team and get you money because they can trust you. And so it's very important you have the right people with you, otherwise the JV will not work. And there's no point going into JV partnership and you guys are fighting for 500-600 bucks because you're wasting each other's time. Don't do that. And you've got to have professionals involved. You got to make sure you've got the right lawyer, right accountant, right banker involved, and right town planner, and obviously you're buying the right property. So you're not buying something that's not a good property. You're buying something that's right. So you're getting the right people to check it. So very important you surround yourself with right people. So, so what is syndicate investing, right? So people must go, oh, we've heard of the word syndicate investing. Syndicate investing can be just a group of people, pulling their resources together, right? So basically, like, Thin and I could be doing syndicate investing, just two of us. We put our money in. So you do it with your mate, or you do it with your wife, you do it with your partner. That's what syndicate investing is, just getting a bunch of people together, getting the resources together, and then investing. And it could be just a single project that you're just buying up, doing up a property and selling. So there's just two shareholders or three shareholders, and they're going together, and you might make 100 grand and split the 100 grand three ways. Or it's a long-term building portfolio over time, and that's what I did. In 2010, I started syndicate investing, and within by the time it was 2017, we each of the syndicate investor made about $5 million each. So it works, and we were all on the same page. So if I was a young lad sitting in there, say in your mid 20s and up to 50, just because I'm 40. So I'm gonna say up to 50. You syndicate with your mates, and it's actually good fun. You might throw 100,000 each. You might get three mates together over beer. You go, okay, we'll put 300,000. We go and buy some long-term rent portfolio. It's so much fun. It's just not about buying, building equity. It's about meeting each other, and discussing ideas, discussing your family issues, and that's all it is. You become really good mates. And one person can't do it alone. I'm telling you this now. If I did property investing alone, I'd be so bored. I just love dealing with my mates and talking to them. We got Maggie coming up shortly as well, so I talk to Maggie then, and I talk to my investors all the time, and we're always trying to work out new ways, and we share risk. Everyone makes informed decision, and we know what we're in there for the risk, and if we lose 50 grand, okay, there's three of us, we lose 15,000 each. But if we make 200 grand, we share. So you share the risk, you share the workload. One of them could be a funder, the other one could be running around doing all the work and all of that. And so there's cost and rewards. But the most important part of syndicate investing that I enjoy is the socializing part. Because not only I socialize with my business partners, I socialize with the bankers as well. It's just all good fun. And this is your syndicate benefits, right? Access to bigger deals than you could be done alone. So you could, and I will show you some of the bigger deals that I'm doing with my business partners. So you've got access to that. You share risk, and you'll share your resources as well. That's what you do. You do that, and that's so important that you look at that and go, okay, we can share the risk together. We'll share our resources together, and we get this outcome that we all are working towards, and it works. And trust me, I haven't got all my syndicate investing correctly. There's things that I've missed out, and I've lost money on some stuff, but it's all calculated. I knew if it went sour, we'd lose 150 grand. But if it came right, we'd make $500,000. So you combine your skills, your network, everything together through syndicate investing. And syndicate investing could be with your mum and dad as well. It doesn't have to be with mates. So you could do it with your mum and dad as well. And also that. And the issue with if you don't do syndicate investing, your borrowing becomes an issue. It's only limited to what the banks are going to lend you. When you do syndicate investing, right? And what you do is you do syndicate investing and you get hold of multiple banks to help you. It works. And we got a good mortgage broker, Chris Peterson, and he's good at driving syndicate investing for our clients. Now, let me tell you about my client base just quickly before I jump on it. 95% of my clients are multi-millions, and I've said this before as well. They've made millions and millions over the last 20 years through property investing. Property investing works. You get the outcome that you want. And you know, over time you slowly look at other investments like shares and that. But for the first 15, 20 years, most of those guys stuck to property investing, and they've cashed up. They might have had 20 properties. They've cashed up 5 properties. They've still got 15, and they've probably got 1 million or 2 million in the bank account, you know. Another advantage of syndicate investing is, you can have a foreigner that comes in with deposit funds, and you have a Kiwi. You can work together, and you can syndicate. So you can buy properties, do up and sell, or the foreigner is not getting enough interest income. They're probably getting 2% interest income on their funds. They can bring in and invest with you. So you got things like that you look out for, and you can have family members who are living overseas or friends who've got cash that you can use to do property investing. Um, some of the other advantages, you look for cash flow strong partners. That's very important. You don't want to have poor syndicate investors in who will complain about 500 or 600 bucks every time. You want to have good cash flow, strong partners, or people who have good equity. So, sometimes people have good cash flow, they don't have equity. Sometimes people have good equity, they don't have cash flow. And you've also got time poor investors, so you can, there's a lot of doctors out there who are just time poor, and they were happy to invest with someone who's going to run around and do all the work. So you look at people like that and you try and syndicate with them. And you also get silent funding partners. I do that as well. I write check out to Thin, and then runs around and does all the shopping and does the deal and then sends me the profit back. I wish. Um, no, most of the time he does.
And the Ferrari.
Yeah. Unless Thin has recently hit himself. He was playing rugby, and he hit his leg. Oh, sorry, Thin. Was it rugby or
Ruptured my Achilles.
Achilles? What was it during rugby? Wasn't it? And
That's it's nipple, indoor nipple.
netball. Can you guys believe Thin broke his leg playing netball? I mean, who does that? So
It's
you
a
guys
sport,
can give
man.
him crap. Feel free to give him crap about that. But but yeah, silent funding partner works. I do that a lot. Like I said, I do silent funding, investments, and I just wait for the guys to go out and do deals, and I just get a cut. Now I'm also time poor because I don't, all day I'm working in accounting, meeting bankers and meeting my property guys. So I am time poor. So I do look for guys who can do the work, and I'm happy to invest. Now, how to set up a syndicate investing? How do you get it going? You must always have a suitable agreement, because what you don't want is just, guys shaking hands and you guys are doing something, and let's say you lose $60,000. Well, you want to know what's going to happen with the syndicate. Are the syndicates going to share 50-50 with you, or 80% is theirs, 20% is your loss? Or if there's 300 grand profit, what's your share? What's the syndicate's share? So you must have a head of agreement, or some sort of JV agreement in place, and you must, very important, you must get good professional quality advice. That's so important. You have the right people around you. Um, JVs are good for one-off projects, So if you're doing one-off, let's say you go and buy a site, build 3, 4 houses, or trading a property, you can do that as well with a couple of your mates. And like I said, it's just not about making money. It's about helping each other on personal life matters as well. It's so much fun. Um, I always recommend people to make sure they use a limited liability company when it comes to doing JV. Very important. Please don't do anything in your name personally. You leave yourself exposed to a lot of things, right? It doesn't cost much to set up a company and do it properly. Please use a company all the time. Never ever invest or do a JV, especially a trade, in your name personally. It must be through a structure all the time. A company structure is probably the right way to go. But like I said, if you're not sure, get hold of us and we'll sort that out for you. Um, Partnership and trust for ongoing investment relationship, those are good as well. That works. You always outline your roles. What's your role in the JV? Very important. Who's going to put the money in? Very important. Who's going to make the decisions? How the profit and loss will be shared? How are you going to get out of it when the property sells and settles? Do you shut the company and start a new entity? Very important. So you need to have a JV agreement for that. Like, for example, when we build our development sites, when we build houses on our development sites, we only use one company per development. We don't mix a couple of developments in the same company. We just don't like doing that. So when the projects finish, the houses are sold, we shut the company down. We don't need the company anymore, and we'll open a new company for a new project. Um, always use a property accountant and a lawyer who understands what syndicate investing is. Right, very important. What happens is if you go to a lawyer who doesn't understand property investing, or an accountant who doesn't understand property investing, you could end up drawing up wrong agreements or getting wrong tax advice. So very important you get the right advice upfront. Um, and the lenders, always assess the group's income and equity. So the more income the group has, and the lenders are happy to lend you money because they are secured. So very important, you team up with people who have income or who have good equity in place. Um, Contributions can be money, time, or something else. That's what you need to do in your JV agreements. That's what you need to decide. Don't worry, guys. I'll show you an example. I'll show you lots of examples shortly about how we do JV agreements. Now, one of the skills we have here at GRA is we can prepare you a JV agreement. Basically, its rough cost is about 1,200 plus GC per partner. It's important a JV agreement is put in place. Now, if we won't do it, we'll refer you to a lawyer who'll do it. If we feel like it's a little bit too complicated for us, but we can definitely prepare. Slightly complicated JV agreement if needed. Um, and once the JV agreement is done, so it needs to be adopted by everyone, and they must understand what they're getting themselves into. Um, and each partner will need to get their own specific advice. So what I don't want to do is basically sit two families down and say, you're going to do a JV, and I'm going to give you the same advice. We don't want that because each family will have different affairs, financial affairs, and they need to protect their affairs differently. So definitely will give you a combined advice, but each partner will get their specific advice as well. Then we encourage you to take independent legal advice. Very important. It's totally up to you, but we suggest you take that. Um, we don't obviously offer any warranty of a deal. If it doesn't work out to be profitable, it's got nothing to do with us. So it's very important you understand that. But yeah, we can help you with setting up agreements in place, setting up the structures, and anything else you need for banking purposes or from legal perspective. Now, guys, this is a basic JV structure that obviously I'll recommend if you were buying long-term holds or trade properties. I'll probably say more for trade property. This would be the structure you want to go into. Say two business partners. I'm not talking about husband wife here. I'm more or less talking about two business partners or two workmates, right? Two different people up here. They set a company up together to buy and sell houses, right? We want you to use a company. All right, you've noticed we put a note here, do not form partnership in personal name. Therefore, we recommend a JV company. Now, when we say do not form partnership, what we're saying is you two, person one and person two, don't go and combine together and form a partnership. Because what happens when you form a partnership, all the liabilities to do with the house stays with you, right? You've got ID obligation liabilities. Now, let's say you've done a good job, you've tidied up the property nicely, you've sold it. 3 years later, the property, the roof's leaking or whatever is happening. You're personally liable for that. So you must use a company structure to protect yourself. It could be not your fault, and suddenly you're now brought into this mess to clean up. So it's very important that you use a company structure all the time. Do not operate in your name personally. I'm telling you this now. Now, if any of my clients force me to go, no, they're going to do it in their names, I tell them I will not act for them because I know what happens when people trade in their name personally. They are liable for all their actions. Um, Now, this is an example of, say, your JV partnership here, where you are basically using long-term investment. So we got partner one, partner two, trust two. So you got two families here using their trust as the owners. This would be a structure that we'd probably recommend for long-term investment hold. So we set up a JV partnership, and basically your trust will own the shares in this JV partnership. Now, this is for long-term holds. Now, if you are looking at doing syndicate establishments, we can definitely help you with things like tax structure on both sides, asset protection, tax efficiency. That's important. Now, sometimes we need to distribute profit out to your kids or to your spouse to reduce your tax obligation. Like I said, we can help you with JV agreements, putting governance in place and profit split, how the profits will be split or how the losses will be split in the event there's a loss. And we use GRA to form partnerships, including tax and compliance. Very important. So not only we can structure your tax side of things, we can also do your compliance part of the work. And look, property trading is not easy. It's complicated. So you got things like zero rated issues or both parties are GST registered. And especially nowadays, there's a lot of property traders are trying to buy um, KL stock or state housing stock, and those providers are GST registered. So we need to be very careful with clients who are buying those stock. So again, we'll give you independent legal and tax advice, as well. And like if we're acting for both parties, we'll actually take independent advice based on the advice we'll give you, but you don't have to, but we'll actually give you that option. No, traps to avoid. So this actually doesn't only apply to syndicate investing. It applies to a lot of things in your lives to do with property investing or business investing, anything you do in life, with your spouse as well, right? You got to have written agreements. Relying on each other or being mates doesn't work. You got to have something written. Even have a heads of agreement in place or just get a lawyer to drop something, just have something in place to avoid any sort of fight. The last thing is you need to get into fights and write, thousands and thousands of dollars in check to the lawyers. And also you've got to wonder, was there unequally efforts? If one person does all the work, what does the other person do? Are they the funders? Are they the ones who are taking risk? Because the person who's taking the risk and the person who's doing the work, it's the same, they're putting the same amount of effort into it. So it's very important to work out who's doing what. Um, and also having poor exit clauses, you've got to be careful with that. You got to, have a good exit clause in the event something goes wrong. How do you get out of the partnership? And this is some of the things you need to discuss because this is what business is about. And look, if you join a firm like GRA, if you hang around people like Than, Maggie, and I, or Matthew Gilligan, we all help you design this thing. So in the event something happens, we guide you through the exit, right? And careful with over borrowing, and or not having enough funds. You've got to have your reserve working capital. That's very important. So this is some of the mistakes we've seen people make in the past. They've got money to build 2 houses. They've decided to cancel their plan and build 18 houses, and they've run out of money. So be careful with that. If you can only afford to build 2 houses, you stick to their plan, right? Doesn't matter if the 18 houses makes more profit. If you can't afford to do it, don't do it. Um, Ignoring tax and legal advice. Never ignore good tax and legal advice. Very important. Or only one partner is getting the advice, the other partner doesn't bother. Um, and unbalanced advice where it favors one partner, be careful with that. That happens when one partner is only getting legal advice and the other partner is too busy working, not watching what's happening. So always get balanced advice. You've got millions of dollars on the go here. So very important. Um, like I said before, JV in personal names, what we refer to as sole traders, don't do it because you will inherit all the liabilities personally. Like I said, something happens 5 years later, you are up for the liability. The roof leaks, they can come back to you for the money for selling them a house. They had all these issues, right? One of the things I've seen in JV partners, especially if you're doing something bigger, let's say, 3, 4, $5 million investments, and what I've seen is JV partners not having insurance, right? Very important. You have insurance on your JV partners if you're doing bigger numbers. In the event your partner dies, right, you should be able to get an insurance payout or hire and use the money to hire someone to finish the project. Right, very important. So having insurance on your JV partner is really important if you're doing bigger projects. One of the other things that I've noticed is when people are trading houses, they've gone and bought a house for $1 million. The insurance is say 600 grand on the building, as is where it is. I've got the clients, renovating the house, putting another 600 grand of renovation in. They don't get they don't get updated insurance or contract works insurance in place. Now, if you don't do that and you've only got general insurance cover and something happens and touch it, the house doesn't bend down, if it does bend down, you've only got general house insurance, your company will write you a check for 600 grand and see you later. Whereas if you had the contracts works insurance, not only you'll get your 600 back from your insurance company, you'll also get a payout from your works insurance. So it's very important you get all this implemented. Now, if you're renovating a property, let's say for 6 months, on a house that's worth $1 million, your contract's works insurance could be like, 1,500 bucks. So it's not a lot of money to insure yourself properly. So be careful how you're doing that. And there's lots of companies out there offering you contract works insurance. So make sure you get that. Now, contract works insurance means you get insurance on the property. Like, for example, you might get a $3 million cover because you're working on your house. And if something happens to your property, you could damage the neighbor's property. So that's why you need to get contract works insurance. Very important. Now, guys, I've also got Maggie and Then, like, you can see them sitting there and nice and happy, joining us shortly. Now, they look really excited today, more excited than I've ever seen them before. Um, they are active investors, so they are hardcore property investors. So feel free to abuse them with lots of questions. They've got trading success. They've done property trading. They've helped clients with property activities and all of that. They understand market value assessment. Look at a property, they understand what the value of the property will be. They're renovation experts. They do a lot of renovations. They help clients with project management, portfolio growth. They help you grow, like what kind of properties you should buy based on your earnings. They help you analyze properties. Very important, because you could be buying a property with major issues, thinking you're buying a gold. It could have drainage issues. It could have flooding issues. And they do help you with due diligence support, and they give you development advice as well. So they're very informative guys, and they're going to talk for the next 20 minutes. Then, do you want to take over then?
Yeah, I'll take over that. And thank you, Salish. One thing that I, sitting here listening to you, and one thing I missed, and I do miss it quite often, even with the injury now, is the meeting up with like-minded people. When I was doing trading, um, as JV partners, we'll meet up at 6 o'clock in the morning at a cafe twice a week. We'll go through all our properties, what's on our target list, do our due diligence, and not only the fact that we're making money and exchanging ideas, but the environment is just something. It just makes you hungry. You feel great. You go out there and you tackle the day. And that's something that I'm actually missing by sitting at home at the moment with my ruptured Achilles.
That's what happens when you play rugby, my friend. Um,
Yeah, I'll stick to the cricket ball next time.
Yeah, yeah. Now, guys, before Then takes over, I'll just quickly, you, we love lots of questions, so I need you guys to ask us questions. Otherwise, it's kind of like we're just talking to each other. So feel free to type in questions. Don't think it's a stupid question, right? Because a stupid question kind of leads you to something better. So get those questions going, guys. This is free resources. I'm 550 plus GST an hour. Maggie and Then are 500 plus GST an hour. So there you go. You got $1,000 of free resources here. Get it going. Sorry, Then go for it.
No, all good. So the reason why we're talking about syndications, because my journey pretty much started in a similar way. Because my first deal that I've done was, yes, I had a saving of 50K, but I needed to access my family's money of 130K revolving credit facility to get me going. So in essential, it is a JV with the family to make money and then to pay them back so that I can build capital to do the next deal and the next deal onwards. And that's how my journey started. But, you know, immediately going out and borrowing this money from my family, they would have told me to no F off in another way because you don't know anything about property. So I had to prove to them that, that I am a trustworthy person. I have the skill set. I know what I'm going to do with the money in order to make it work. And that's when, I've got the property education, support the people around me, and to say, look, I know what I'm doing. I've seen people doing this, and I've got the people around me to support me to get there. So that's what was my starting point. And this is back in 2015 when I had access to this money, went out, borrowed against it, and made 65K profit. Then the next year, did the same thing, but for me, while working full time because I wanted to be bankable. Because when I don't have a regular income, no bank's going to lend me any money, or no lender's going to give me any money because there's a mortgage to service. So the aim there was one deal every quarter, and the next year when I did 4 deals and did 200K worth of profit. And then 2017, I resigned from my sales job and got into more depth in doing trading. So, I mean, it's all great, getting the knowledge and doing these deals, but, I would like to share with you guys some of the deals that I was involved as a JV. So this was an example where someone else found the deal, went to auction, ran the actual the numbers, and came to us and said, "Look, these are the numbers, they all stack up. We did our due diligence, did our current market assessment of the project and the renovation, and said, yep, we're happy to do a JV with this one and oversee the renovation and be a full support." So if you're looking at the photos, this was in New Windsor. It was a three-bedroom house, run down, and there was an old couple that was living there. They just wanted to sell up, move down the line, and retire with the kids. We were closer to the kids, so obviously the property has seen better days. But yeah, it needed a lot of work, so that was the transformation. As you can see, that's the exterior, the inside, the open plan kitchen, dining, bedroom, all staged, and living. And so it was a full renovation, and this was a big project. And here's the numbers. So the purchase price was 865,000. The renovation cost was over 220,000. The real estate agent's fee, the interest cost, and everything all up, it came up to 1.154, sold at the open market for 1.3 million, a profit of 124,000 before tax. So that was that project as a JV where, two partners came together, one found the deal, run the renovation, the other one funded it, and they split the profit. Here's another one that I've have shared in past examples was a two-bedroom big house in South Auckland, which we did the numbers, converted into a four-bedroom house, uh, and full renovation, kitchen, bathroom, painting inside out, and did a full renovation here. And the same principle here. Two partners got in together, found the deal, we ran the numbers, and we're confident with what the outcome is going to be, and we did go ahead and bought the property and did the joint ventures. On all these projects, we had a JV agreement, and everyone knew what was their part in this role of this particular project. So that one bought for 825,500, renovation under 100,000, real estate agent costs and everything involved. It was 975,616, sold it for 1.170 in the open market at open auction. And so that was a profit of 167,000 before tax. So, that's a great deal. And this is one that I was involved in the earlier stages with in Glen where so you can see the before and after photos there. It was a very straightforward renovation. We didn't do much to the bathroom, kept it similar, existing, just tidied it up, paint the outside, uh, renovated the kitchen and the flooring. And that number we bought for 630. Spent just under 40,000 K in renovation. Um, After all the costs just came up to 701 and sold it for 758. So we made a profit of 47,000 before tax in that one. And that took us about, I think, believe 4 months to do. And so from an investor's perspective, just looking at how much money that we put into this deal. So we put 189,000 as the investor. So we both put our capitals together. That also including the renovation and the holding costs. So $240,000 what we put into the deal. The rest was leveraged, so borrowed from a lender. And then the profit there was 20% on the money that we invested. So yeah, that was a quick, nice deal that we pocketed because we had the money sitting on the side and going, what do you do with it? So rather than sitting in a saving account, we've just managed to put it into a quick deal and move on to the next project. And I guess the great thing is when you have a great people around you and the number of and everyone's on the same page, you could you know put your pipeline and find properties. Okay, this one's almost going to come to an end in say 6 weeks time. Let's say another 4 weeks for it to sell. Let's go looking for the next deal, get it under contract, due diligence, and have that lined up so that you have multiple properties to go to work on rather than going, okay, I've sold this. Now I go finding the other property. If you have JV partners, that allows you to do more. This one I did with Matthew's installation. We did this together as a JV, where we bought this home and income. So it's a two properties under one title. So it's a three-bedroom in the back and a four-bedroom in the front. And what we did is just bought the property, and we actually paid a finder's deal for this because someone else found it, and we then ran the numbers and said, "Yeah, we'll take it." Um, Spent 50K in subdivision. So we split the titles into two and then sold them separately for 1.810. So all up, it cost us just under 1.5, so 1.495. Selling price is 1.810, and there's a profit of 314,000 before tax and GST. So I mean, these are great deals, and they work, and these are real numbers, and these are the things that get me excited because going out there, finding deals like this, and seeing the result. And this is one of the deal that we
Dan, could you
help.
just go back? Sorry, I'll just
Yes.
tell something. So guys, this is what we call a multi-income site. So you've got a front house and a back house. Now, I'm telling you this now. This multi-income sites, their work is long-term holds, or if you buy them, subdivide and sell them. They always work because people don't realize that if you've got a site like this with two dwellings, so you got, let's say you've only got one house and a section at the back, right? That section at the back, well, is not making you money. But when you have multi-dwelling, the section at the back is giving you the same amount of return as the front house. So multi-dwelling sites always works. These are golden stocks, and you need to chase them and buy them anywhere. Now, one of the things is I'm buying, and I've said this before, I'm buying a lot of properties in Rotorua and out of Auckland. And the reason I'm buying them is because I'm chasing cash flow, right? So a property like this in Rotorua, I'd pick it up for 700 grand, right? But the rent will be $1,200 a week, $600 on each site, right? And honestly, it's just unbelievable the amount of cash you get from this kind of site. So I can show you the stocks we've bought in Rotorua and the kind of rent we're getting. If you like that, feel free to email me privately and I can show you some of our stock. This thing works, multi-income works. So it's very important as property investors or future property investors. You if you can buy multi-income properties, they cost probably 250, 300 grand more, but you buy them, it works because the cost to build a second house, then if you can run your case of the second house, to build a house like that, your driveway, your drainage, your connection, and the house is 500 grand minimum in Auckland and 600 grand minimum in Rotorua because it costs you 30% more to build houses in Rotorua. So just the beauty of paying another 300 grand to get another dwelling on your side works. So chase stock with multiple income. It's always worked and will work going forward. You know,
Yeah, agree. And like you said, it's cheaper to buy existing than having to, build another one at the back. And you got one, I've got one, and Maggie, got home and income properties, and they've done so well for us in the long term. And then there's different strategies that like you said, you could subdivide, sell one, keep one, or keep both, um, or sell them all and cash up the profit.
yeah,
Um, the other one is this is an example of a client that we arranged a JV for them where they've sourced a deal and we helped them with the JV agreement and the setup and the tax and structures. So this was Mary and Blake from memory. One was in Australia, the other one was here in New Zealand. So they've got the deal, but they couldn't. I mean, Blake couldn't do it on its own. So he could run the project, but needed someone to come in as a JV partner in order to make the transaction work. So Mary came in, she funded the deposit and the renovation, and they borrowed against the deposit with the lender. And then once the project was done, they were able to sell it and divide the profit. So this was in Lower Hutt, and that's the photo of the house and the inside of the renovation. So no, it's fully renovated. I mean, we tell our clients, you don't cut corners, you do everything right, so that nothing comes back on it, and so that it does also sell. Because at the end of the day, when you do sell, there is gonna be a builder's inspection, and everything needs to be right. Because I mean, who wants to buy a house that's not perfect or has problems? And this is the numbers for that particular client. They bought it for 435,000, spent around about 65K in renovation. The real estate agents the transaction costs and everything. It took them 3 months. So the total cost was 532,115. Sold it for 647,000. And then they made a profit of 115,000 once you take GST. That's just under 100,000 before tax. So they walked away with just under 50,000 each in the space of 3 months. So no, they do work. I've been part of it. Celestia's been part of it. Maggie's been involved in it as well with JVs. So the proof's is in the pudding. And if there's something that you can't do by your own, they say two minds is better than one. So that's my journey through property and how JVs have helped me get ahead. I'd like to bring Maggie over and I think Maggie it was more of a love story than a JV, I think. But I'll let her explain the story.
Yeah, Maggie's got too many dark secrets. Come on, Maggie, tell us.
Thanks, guys. Dan's just shown us quite a lot of examples of JVs working in property trades, which really great place for them to work, especially if you're only looking at a shorter relationship with your JV partner. I'm going to show you a quick little example of how JV partnership could work for hold properties as well, especially if you can build up a portfolio that doesn't require too much cash injections from you, that enables you to hold it longer term. And of course, holding a hold portfolio with a JV partner might be more suited to long-standing relationships such as somebody in your family, perhaps not so suited to friends, since priorities could change over time. Somebody moves overseas or so forth. So our starting point was getting the right sort of advice and education at the outset, so to avoid mistakes that really not only can cost you money but cost you time and the lost opportunity to be doing a better deal in the first instance. So both parties were working. So the two incomes are allowing us to borrow ordinarily just from an ordinary bank. So PSB and Kiwi Bank in this example. So we didn't have to go to higher cost second tier lenders. One JV partner had a paid off rental property that was worth 430,000 at the time. Both renting, so there was no mortgage, sort of personal mortgage draining the income, affecting the serviceability calculations. So we're able to get a $300,000 revolving facility. So that was secured against that rental property. And you've got the two incomes. Did a little bit of active trading. So some very similar examples to what Than's just showing early on. And then we're able to filter that money into hold properties. And to save money, we're very hands-on. It did a lot of things in person, but there's on the downside that did slow progress down as well, because while you're working and trying to do renovation work and demolition and things, instead of paying somebody for it, you did end up paying more in interest because things took a bit longer. But it only took 8 months to collect a few rental properties. So in January 2015, purchased a little small unit, which by itself, may not be that great, but it came bundled with the next property, which is the one that we probably really wanted, which is a house and a granny flat. So one of those multi-income properties. But rather than divide it and sell them separately, we held on to it as a rental property. So that's had a significant increase in rent. You might notice there from $585 to $990. So part of that will be attributed to renovating both the house and the granny flat, but partly bringing the property up to market rent with two separate tenants in place, one in the house and one in the granny flat. Whereas at the time we purchased and inherited a tenant for a short time until they left, the previous owner of that property was only renting it to a single tenant. So it was the tenant that was gaining the benefit by then subletting the granny flat to subsidise their own rental payment, whereas after our purchase and renovation, we gained the benefit by having two separate tenants in the two dwellings. A few months later, we purchased a house in Sleep Out. So those are consented 2 bedrooms and bathrooms on the side of the garage there. And we're able to significantly increase the rent on that property as well by renting out an additional large shed, which is not showing in the photos, to a separate tenant. So it was not a residential building, but we were able to rent that to people over time that put it to different uses. So a chap that was a personal trainer, so he set it up as a gym where he taught his clients, and then another chap who was a car enthusiast, and so he used it for doing up cars. And then again, a few months later in August, purchased another house and Sleep Out. So the rent again was very low on purchase. So that was, in that instance, the vendor did actually rent the 2 out separately, but the Sleep Out, whilst it looks like a separate little granny flat, was in fact only consented as a Sleep Out, so not legally able to have 2 separate tenants. So when we purchased, we inherited the house tenant only, and thereafter placed a multi-generation family in the entire property. So but under a single tenancy, and brought the rent up again after a renovation as well. So that property, you'll see in the figures there, fell short each year. It didn't cover its own costs and a principal and interest loan, so all the lendings on principal and interest terms. But the surplus on the other 3 was so high that it covered that property. And so 2 of them offered there a significant gain after, first one after renovation, the second one simply after purchase. So great equity gains there and significant rent per week increase as well.
And Maggie, if you can just go back to that last slide, sorry, then you can go back, and guys, just coming back to Maggie's portfolio, right? The way you can look at a cash flow working is those multi-income dwellings. They always work, and here, I mean, Maggie's spouse became this business partner here. I presume you guys were spouse before you got into properties, or
No.
Oh, it happened during properties. Oh, we didn't know that.
Was that part of the JV agreement, or?
Oh, I didn't know that, Maggie. This is the first time I've worked that out. So Maggie obviously, sat next to someone at the presentation, hooked up, and started doing this. So there's the 2 houses here. But if, let's say, it was Maggie and a business partner here, they could just easily subdivide, and one would keep the front one would keep the back house, and that's the beauty of doing, JV. But what you can see is Maggie's chasing, she's ticking all the formulas. She's chasing multi-dwelling income, cash flow, land banking, right? She's got all that ticked off, right? And she's chasing all that, and she's doing a JV with someone with capital or income, and that's what we are promoting here today. JV works. It works if you've got the right people going for you. Sorry, Maggie, we'll go forward now.
No, that's fine. I was just thinking as you were talking that last property, they had a $300 a week rent increase as well. So that really, those big rent increases not only help you with the equity gain when properties revalue, but allow the portfolio to support itself. So in this instance, after a short time, the entire property was 100% financed. So any personal money or equity was out. That revolving credit facility was repaid. So you can actually just hold that, and it wasn't a drain, on personal incomes, didn't add to expenses. The properties paid for their own costs, and there was enough money in there if a roof needed replacing or a hot water cylinder leaked and had to be replaced. There was money in there to do that. We didn't have to dip into our own pocket. And over time, the rental income, of course, grew substantially. And had we done nothing else, after 25 years, they would have been debt-free, because the debt principal, rent was paying down principal right from within, the second year of the loans.
Yep.
Awesome. And also you've sold some of them, and you've
purchased other things.
Other things, yeah. But that's fantastic, because you can see how JV works, and whether it's someone that you don't know at start, then you get really close to someone after that.
Yeah.
In Maggie's case.
if you guys are single, get out there and get to the presentations and lead by Maggie's example, you know? Um, yeah. But here's another JV that we've done recently, and Then was the project manager here, but there's about three mates here. We did it together, and it's three dwellings we built in Auckland, Mount Roskill. And so we bought the land, and the subdivision cost us 1.8 million, 2 million to build, 3.8 million in total. So our valuation came at 4.8. We made $1 million of equity on the site. That's, you can say it's our profit or it's our equity, right? And what we've done since is we've rented these properties out, and they've got good cash flow rental coming in. I think the three are rented for $4,500 a week, and so we got good cash flow coming in from these investment properties. So these are good, again, syndicate investing we're doing. And obviously, when you do syndicate investing at this level, you got to make sure you've got the right people around you and they're helping you through the projects. And you can see this photo from across the road. Now, then you were managing the project.
Yes.
It wasn't a hard project to finish, wasn't it? It took about 6
No.
months.
No, it was very a straightforward project. I mean, the neighbor wasn't happy with the tenants later on, but that was the only problem I had. But otherwise, we were fine.
Yeah, it was good investment, good property, good returns, and I just want to come back to the same thing. JV works, it always works. Sorry, then if you want to jump onto the next slide.
Yep.
And then do you want to talk about this one here?
Yeah, so this is the one that we finished this year. I mean, not long ago. I think about 3 months ago, we completed this one in Papatoetoe, which is consist of two four-bedroom houses and four three-bedroom house with single lockable garage. So it's a six lot development. The land cost was 1.65. The development cost, so that's the build cost, was about just over 2 mil. So the total cost was 3.93. When the market value came at just over 5 million. And so the equity gain is 1.1, and that's Salesh, Matt, you guys are holding on to it as a long-term rental. And this was another fantastic project, and it was less than 12 months. We were able to get this done and dusted. The other one is this one that was currently under construction at the moment in Tier 2 South. It's an 8 lot development. Land cost was 1.5, and we picked it up with resource consent, building consent, and everything ready to build, pretty much shovel ready. The development cost is 2.5 million, and so the total cost is going to be about 4 million, and the market value will be about 5. So about $1 million equity gain. The thing with this project, and here is a story, is that there has been few hiccups and issues on this site, but having the right people around, people who understand property, would make this lot smoother to rectify. And one of the issues was the power line, and the other issue which is a big crack on the main pipe stormwater line that goes underneath the house that needed to be bridged. But things can go wrong in any business or any project, but having the right people and everyone you could pull on when you're stuck out of, like for me as a project manager, hitting my head on the wall going, I can't get a solution for this. Pick up the phone, get everyone on the conference call, and then we put process in place to move forward. So having the right team, the network does help. The recommendation would be yours, Salish.
Yep. So guys, over time we've been presenting and I always hear things like, "Oh, I wish I started investing 10 years ago," and all of that. Now, guys, it's never too late to start investing. So if you're buying properties now or over the last, say, 24 months, you're basically buying properties at 2020 prices. So now is the time to buy those properties because they are only going to go up. You've seen the photo of those auction room. So don't do nothing. You got to act sooner than later. You'll always say in your life, "I wish I did that 10 years ago. I wish I bought more properties 10 years ago." Maggie says that. Then we'll say that. Only if we knew what we know today, we'd have bought way more properties. Don't use lack of time or fear as an excuse. Every time someone tells me they've got lack of time, they don't have time. I'm like, grab your phone, look at your screen time on your phone. On average, it's just unbelievable that people are spending 3 hours a day on their phone, and before we had iPhone, people would just search properties or investments, and look up and do that. So don't use time as an excuse. You got to go forward. Draw yourself a timeline with targets. So something that I did. I drew myself a 10-year timeline, and I wrote what I wanted, and I worked towards getting it. So it's very important when you draw yourself a timeline. It's a 10-year timeline, and what do you do? Now, one of the oldest tricks with property investing is, and you can talk to older investors. They'll tell you about this. Is you buy 10 properties, and once you go past the 10-year mark of holding them, you sell 5 and you pay all your debt off. So you got a family home and 5 freehold rentals, and you got passive income coming in all your life. So you don't sell those properties because they're freehold. And it works, it works. Every day I meet a client who say to me, Salish, I've got $20 million of properties now that are debt free. I've got $7 million of property that are debt free, or $5 million, because I bought 10 or 12, and then 10, 11 years later, I sold half and paid off my debt. So property investing works, So that's one of the things. That's why I'm saying draw yourself a timeline and work towards it. When you have a timeline, you'll see the light at the end of the tunnel. When you don't have a timeline, you don't know what you're doing. And surround yourself with the right people. So important. Always surround yourself with good people who think properties, who have network. And GRA is one of those firms. We are so well connected in the industry with the banks, with tradies, with property finders, and Maggie and Thin. They can do DD with you and understand what's happening. You got people like Matthew Gilligan, you got me, who can help you review your portfolio and see what you need to do. And you always think long term when it comes to property investing. You can't think that you're going to become a multi-millionaire by holding properties for 3 years, right? It doesn't work like that. You got to hold it for 10 years and it happens, right? I mean, I within 10 years, I created a portfolio that I can retire on. And people always go to me, Slash, why don't you retire? I actually find retirement quite boring. I could have retired at 30. I'm 41 now, and I decided not to retire. Because what was I going to do? Like, smoke all day, drive around, drink all day. I do that anyway. So I don't need to be retired to do all that. I don't smoke. Just I can't handle smoking. But I drink, I drink whenever I want. I go and meet my mates whenever I want. I have all the freedom I want in life. So actually property investment works, always works. This is something that I have to touch on. It's so important. I suggest you take a photo of this. Um, you know, every week I hear someone's done something wrong or something's happened, right? So what's happened is we've got investors, and it could be anyone if you're listening. You've bought properties, 7, 8 years ago or 10 years ago. Say you paid 700 grand for the property is worth 1.1 million today. Now, if you check your insurance, your property might only be insured for 300 grand. So touch wood, nothing happens. But if there's a fire, right, your replacement cost could be 700 grand. So the insurance will send you a 300 grand check and say, see you later. That's your problem for not having enough insurance. So it's very important that you check your insurance and have the right insurance cover on your properties. Now, you got to remember, properties out of Auckland cost more money to build, right? It's because of freight, it's because it's hard to get traders in, right? So make sure you get right insurance on properties out of Auckland. And in Auckland, you make sure you have right insurance. It's happened before during the flooding we had, the Auckland flooding. People were underinsured. Please spend like 20 minutes and insure your properties correctly. Now, another thing that I'm going to touch base on is personal insurance. Guys, very important. You have the right cover in place. We've recently had a lot of mates go through insurance or health issues, and luckily they had insurance cover. So it's one of the best investments you're going to make in your life. You don't need to have a massive life insurance cover. All you want to make sure is you've got good health insurance in place. Now, for property insurance, we use a company called Initio. They're quite cheap. And then if you tell them that you're part of GRA, you get a discount as well. So definitely have a go. Get a price from them to insure your family home, your investments, and they'll come back to you with the pricing. Now, with personal insurance like your income protection, trauma cover, life insurance, we use a company called riskdirect.co.nz. There's a guy by the name of Steve Monroe. He can give you a hand with it. So if you email them, they'll do a free review because they can't sell you a product you don't need. They'll review and tell you if your insurance is right. You all tick. if there's issues with the insurance, they'll come and tell you there's issues here, you need to change this, but they'll give you free advice. So get in touch with your insurance with Risk Direct, and they'll help you with the insurance. Then can we go to the next slide? So guys, like you've heard me, Maggie, chat here. Maggie, do you want to give us a bit of road path of where we should be going with what to do next for all our listeners? And a bit of
I think
that.
the key thing is not to rush out and buy a property in case you get it wrong and it's a dud, because that can, as I mentioned before, it can not only cost you money, but it can cost you the time that it takes to get rid of that so that you can then move forward with a good property. So work out where you are now, and that's thinking about your current situation, and then what goals you have for yourself. And GRA have a software that Matthew's developed called Wealth Suite that helps you do that. So you're able to use that if you would like to. Next, we say get the right knowledge before you buy the property. And for that, we offer property school. And then if you're specifically interested in development, we also have a development school that's more focused purely on development of rental properties. Next, you work out what your strategy is. So we can offer strategy advice within GRA. Get whatever structures you need set up. So that's your companies and trusts, as Celestia's been talking about. And GRA will offer the specific advice that's tailored for your situation on that. Once you've got those structures set up, then you can arrange your finance. And we recommend Chris from Chris Peterson Mortgages for that. And then once all of that's in place, then you go out and find the property, and we can help you find a good one as well.
So very important, guys, you get your structures set up before you apply for funding, because we've had clients who apply for funding without structures, and then suddenly they realize that they can't buy properties in their own name. They've got to have right structures. They've got to reapply as well. So very important you get your structures set up correctly. And if you ever hear an accountant or lawyer telling you don't need structures, well, that's that they don't know what they're doing. You definitely need structures. If you're growing your portfolio, if you're protecting your business, if you're protecting your family home, you need structures in place, guys. Structures work. And then here's a structure. Maggie has a structure. I have 4 different trusts because I like to use structures to get funding and protect my assets.
And GRA has helped set up all my structures for me when I first started off into property.
Yeah, and we have to review Thans all the time because of the risk he carries.
My JVs, my short-term JVs,
and obviously his body risk, breaks every 5 minutes. So guys, what we do is, if you're new to properties, you don't understand what properties are about. We offer education school called Property School. It's an online live course. You get 12 months access to the modules, so you can watch it. If you're Superman, you can watch it in one day. And then if you don't understand, you can watch it again and again because you've got 12 months access. You can ask questions. If you're not sure of what we're talking about in the property school, you can email us and we'll answer questions for you. Or if you need some sort of guidance, we'll help you. As part of property school, you also get 7-week access to Wealth Suite. This is obviously one of the softwares we use to analyze deals. When Ben and I were talking about all these deals we had, we've used Property Suite to work that out. Now, if you sign up for property school today, right now, I can tell you this: property school costs us a fortune. Like, we are offering it for $495, and I can tell you this now: it cost us well over $100,000 to do property school. It's something that costs us a lot of money. The reason we give it away literally for free for $495 is because we want our clients to get educated on property investing. We want you to understand the lingo. We want you to have the network, right? So if you sign up today, you get it for $495, and you get a free book of your choice. So if you want to read Property 101 or Matt's Tech Structure 101, it's up to you. Now, if you sign up today, I'm going to be nice to you. You can have both property books. You can have these 2 books here. Then can you just run your case over those books? So you can have those 2 books there, and they're just really educational books just to help you. So guys, if you want to sign up, scan the QR code and sign up for it, and we'll send you 2 books out. Now, obviously, this is not a public offer. This is only offered to our viewers today. And if you're a GRA client, you get 50% discount. So that's just something bonus for our GRA clients. Remember, we help our clients big time to grow their portfolio and protect their business and their assets, especially their family home. We like to protect our clients' family home. Then, yeah, can we move to the next slide? There you go, guys. So we're going to finish our presentation now. So you can abuse us with lots of questions. We'll answer them before we leave. And if you're new to GRA, feel free to email Amy or scan this QR code, and Amy will call you and organize a meeting time. We will talk about asset protection, tax planning, advice, and any other accounting services. We'll talk about properties as well in that consultation. Now, if you are a GRA client, don't worry. If you need one of those portfolio meetings, please let us know and we'll organize this for you. Now, guys, get your questions going. We're going to start answering them now. Don't be shy. Throw the questions at us. Maggie, what have you got?
He asks, would you consider buying a property in Lower Hutt for a possible multi-dwelling?
Now, just something about Wellington. Yes, I don't mind buying properties in Wellington. I would probably buy in a good street. So I know there's some good streets in Lower Hutt. Now, the most important part is you must check with the insurance company that you will get insurance for their property. Because I know there's quite a bit of insurance companies that don't insure properties in Wellington. If you can't get insurance, you can't draw down on your mortgage, guys. So insurance is super important. So it was a very good question because it made me think about insurance. Just coming back again, when you do buy rental properties, you make sure you check with your insurance company that they will insure the property. If you can't get insurance, the lawyers won't let you draw down the loan to settle the property.
Yeah, and Wellington can have much higher premiums, the region, because of the earthquake risk.
Yeah.
Dave asks if a property finder is a real estate agent that we deal with. Not quite. A property finder is somebody who spends their time looking for good deals and then passes them on to the final purchaser at a fee. So they could be a real estate agent, but they could also be working informally.
Yeah, absolutely.
Curious why social housing for the Mount Roskill development would you not have gotten more rent from private renters?
So I'm a serial social housing investor, right? I'm a serial offender. I like to just invest in social housing. I've done it for the last 16, 17 years. And so every time I build a house or whatever, I obviously approach social housing providers and see if they're interested, and I will rent my properties to them. Like I said, I've probably got one or two private tenants, but apart from that, I do social housing because I just like the way we have the social housing tenants set up. Um, the rents are good, the properties get looked after, and I'm happy with it. And my tenants don't cause any problems to the neighbors. But social housing is built everywhere. So social housing tenants doesn't mean that they're rough tenants, right? They could be just normal mum and dad with kids because they can't get housing anywhere. So they've gone to social housing. It could be the same tenants as Wins.
I wonder if Lynn was thinking of the example with the yellow walkway on the driveway where we had 1,500 per week rent. So that's per dwelling, not in total for 3 dwellings.
Oh yeah, it's 4,500 a week.
Mm.
Correct.
So that's I doubt you'd get that from the private market.
Yes.
Mm. Jane asks, Shailesh, are most of your JV properties out of Auckland?
No. So I've got properties in Auckland, out of Auckland as well. So I invest anywhere there's cash flow positive investment. So I've got quite a bit in Auckland, and I've got quite a bit. I'll probably say 60% in Auckland, 40% out of Auckland.
So he was asking if they were all primarily out of Auckland, if that was for cash flow. But as you say, more of them are in Auckland than out. But
well, the reason I have probably 60% in Auckland is because I bought them years ago, and I've built houses at the back. I've created multi-dwellings, and so there's cash flow coming through from those properties. And the ones that I've got out of Auckland, they're cash flow positive. I've bought them with big land. Yeah.
And brought them very well too. Picked up some great bargains when the market was at the bottom.
Well, like I said, for 750, 800 grand, I'm buying in Rotorua multi-dwelling and I'm getting $1,000 a week in rent or $1,200 a week in rent. I can't repeat that in Auckland and the same tenants. There's nothing different about those tenants living in those properties in Auckland properties.
Question about the lender. So, which specific lender or lenders did you use for the development deals that we just showed, and why choose that specific lender?
Well, I obviously use Chris Pedersen from KPM Mortgages, and he's a mortgage broker and he's well connected in the industry. So it depends on the day who gets me for development funding, and I use them. Like I said, because we are syndicate investors, normally we don't need funding. We just buy the project, and then we say to the banks, do you want to fund it? If you don't want to fund it, we'll cash fund it ourselves, right? So that's what you've got to remember. Now, obviously, initially when we got into this, we couldn't do that. We've made our money over time. So now, if we go out in the weekend, we'll probably buy 4 development sites because we do have cash, you know. But in saying that, I like to use lenders. Now, one of my best lender is ASB, and I work well with them. Remember, I'm banked at commercial level now, so I can't be banked at retail level. I'm banked at commercial level, so I get different kind of service, different rates, and I get looked after really well by the banks. So when you form a syndicate and the syndicates have good cash flow, then the banks will move you to commercial level banking. Mm.
While you get personalised service, do you pay a little bit more in interest as well?
Yeah, maybe a little bit of interest or maybe cheaper interest rate.
Mhm.
Nikki. See, I was getting development funding in the market and then knows this. When people were funding for 15%, I was getting for 7%. So when I say 15%, when you go private lenders plus fee, plus this, plus renewal loan, I used to get 24 months term, interest only at 7%. Now I'm getting close to 5% development funding,
Sorry,
without any
I meant
fee.
that commercial interest rates are a little bit more than residential. So,
No, because I deal with commercial bankers.
yeah. So
It's
once
not,
you get
yeah,
kicked out of being a residential client because
yes,
you've got too many portfolios, you
yeah,
tend to have to pay a little bit more, don't you?
yeah. And your bankers actually become very close to you because they specifically deal with you and understand you. Yeah.
Does buy, reno, and sell strategy still work in today's environment of high costs and uncertain demand?
Then you're the man for that question.
Yes, it still works. I mean, it work. You got to run your numbers. That's the thing. It works, but it's harder to find. We're out in the market and say no to a lot of properties because we're not able to get it for the numbers that we want it in order for it to make a profit. So we just gotta be strict about it because 9 out of the 10 times someone will pay more than what you're prepared to pay for it in order to make the profit. So yes, they exist. It's just that you got to filter through a lot of properties.
Mm. That was always the case, even when the market's hot and people were buying more.
Yeah, I
Yes.
think when we're in a rising market, it was a lot easier. People didn't just bought something and sat on it and went, oh, I'll sell it in 4 weeks' time and make 20, 30, 50, even 100 grand.
Yeah.
But
Without doing anything. Yeah.
yeah, but now you have to be very, very strict.
But I feel like it's that rising market again. So
Mm.
that's why I see the traders are out,
Yeah.
the action's back on. So yeah, with property trading, you got to buy it. You make your money on the day you buy the property. And that's important to understand because you bought it at the right price. Yeah.
And equally, don't overspend. You stick to your budget.
Yeah.
Mm.
Exactly.
Can
Exactly.
you recommend any second-tier lending companies for projects that are a bit different that banks aren't prepared to do?
So Ben, if you email us, I'll introduce you to Chris Pedersen. He's got a lot of bankers he works with, and we can hook you up with a couple of second tier lenders, and they'll look after you. I mean, it's obviously got to work. It can't be on a floodplain, um, or it's got other engineering issues. But they'll have a look at it and they'll give you recommendations. So if you email us, we'll guide you through.
Lee says, I've used Celeste Stan and KP Mortgages for my advice and investments, and they have given me great advice.
Thank you,
Well,
Lee.
thank you, Lee. Lee is a good man. He actually listens and gets on with it. So, and he's one of old school investors. So very important. He understands everything we're saying. He's a good man. So thank you for the kind words, Lee.
John asks, do you have preferred contractors to get renovation cost figures for your calculations?
Yep.
We have a team that we use, and sometimes we don't use them again because their prices change. But what happens is that once you do a couple of renovation, you would know or have an idea of how much a standard kitchen will be worth, or how much is to paint the roof, and that knowledge or the skill set will build on it. Or even by getting a couple of quotes, you already know what's the market is charging for it. But yeah, we do have preferred contractors that work for us, and we use them, and they're happy to continue working with us.
Yeah, and we're happy to, if you want to work with us, call our fan and we can guide you through some of these processes.
Yes.
The important thing about understanding a tradesperson is they show up and bloody do the work. It's not the money. It's that will they show up and do the bloody work? That's what he. So what we do with our tradies is we drive them hard because we pay them on the same day. So they like working for us. So they issue invoice at 12 o'clock, probably by 1 or 2 o'clock, they're paid.
Yeah.
And we have strict rules around if you've given a price, you stick to the price and you get the work done, unless there's a variation coming from the client.
Yeah, or a genuine problem, perhaps that was unexpected.
Yeah.
Yeah.
Yeah. Dan's got
And
a lot of genuine problems on sites.
We are humans after all.
there was a time that when you were starting that you didn't have a team of go-to tradespeople, and that builds up over time, but you start off by getting multiple quotes, perhaps asking who people are using, and you build up your own team as you go.
Just like
And
any
you want
relationship.
quality people. You want quality people, just not a cheap tradie. Because if you get the wrong painter, wrong plumber, wrong electrician on site, you are in trouble, And instead of spending $4,000, suddenly you're spending 15 grand fixing up problems.
Yeah,
Yeah.
definitely. And the last thing is that they come do a shitty work, bugger off, and then you have to redo it. They're not going to come back, and you got to rip everything out, and it's all on you. It's the cost is on you. You take ownership of everything. So, do a reference check. Make sure that they are honest, reliable, and trustworthy.
Do you do much in terms of contemporaneous settlements? Excuse me. And what are the specific things you look for in a property to do and structure around this?
Now that's quite a broad question because you've got to be careful. Are you buying properties to hold, or are you buying properties to trade? If you're buying to hold, that means you're going to buy in an entity that is not GST registered, and so you need to be careful with that. Now, the thing you've got to be careful is does the property finder settle the property before it on settles with you, or is it a settlement between you and the vendor? So those are the things you need to watch out for, because if it is a settlement between you and the vendor, what tax problems are you inheriting from the vendor? Right? And if you don't get this checked correctly, you could lose $100,000 to $200,000. So make sure you get that checked. It is very risky because when I hear the word contemporaneous settlement, people think you're settling with the vendor, but sometimes the middle guy is settling for 30 seconds before he on sells it to you. So there are tax consequences. You need to check it and get that answered. Are you settling with the vendor or are you settling with the middle guy? Right?
Or perhaps this is a situation where somebody is wanting to be the middle guy.
Yeah, but is he settling the property? Because the tax, what do you got to understand? The tax starts from the vendor and the person who's settling it, right? If the middle guy has signed up all the tax issues problems and he's not settling it, that means all the tax problems will come to you. So very important we get this checked. And look, it takes us good 15, 20 minutes to work that out and run the scenario with you. And if we can save you 100, 200 grand, why not? right? So yes, it's not straightforward. Make sure you get it checked and ticked off. Check all the GST requirements. Check any other tax issues there might be arising, and then we can sign it off. So it's a very good question, but it's a very broad question because there's so many moving parts to your question that I can't really answer that without a proper example. But in summary, please get it checked by a lawyer and an accountant. Now you got to understand a lawyer can't give you tax advice because they don't understand. So whereas an accountant who does property can come and give you specific tax advice.
Yeah, so you really need the advice from a good quality solicitor and a really good quality property
Accountant.
tax accountant like Jerry.
Yeah. It might cost you $700-800, $1,000 for that advice, right? It's nothing if you're saving 150 to 200 grand.
And also the structure if it goes all haywire.
Yes, exactly. Exactly.
For developments, what type of properties sell? For example, 2-bedroom or 3-bedroom or 4-bedroom, detached or not detached? What are the buyers looking for?
It's something that's actually, which is fascinating in this country at the moment. And I was quite surprised because, I've got properties in different towns, regions, whatever you call it. There's a massive demand for 1 and 2-bedroom houses. It's unreal. And I said to the guys, why is there demand for 1-bedroom houses? And everyone from different towns are giving me one reason. There's too many single men and they want a 1-bedroom house. Yes. Apparently there's a lot of single men and they're looking for 1-bedroom houses.
What about the single women? Have they already bought their houses?
Oh, I know, but that's their reason. And same as my rental properties. Did you know my 1-bedroom unit in Rotorua rents for $460 per week? And I've never had it empty, sitting empty. So the answer to even I had real estate agents in Auckland telling me every time they get a 1-bedroom unit, it sells out the door so fast that they can't keep up with it. So yes, there's a bit of oversupply of 2-bedroom probably townhouses in Auckland, but they're selling. They're selling because people are buying them because no one wants to own a lawnmower now, right? No one, people want to just park their car, go inside and play on their iPad or whatever they play on, right? That's all they want to do now, right? No one wants to go and have a big garden, any of that, right? So I've seen this changing. I personally don't want a lawnmower. I've got plenty of lawn to mow, but I get guys to come and do it because I just don't want to smell a lawnmower in my garage, or in my storage, right? So it's changing. I can see it's changing, and I think I go out and drink with my mates now. I go to their places. No one owns a lawnmower now, and people just wanted something easy. Park the car. They want to go traveling or they want to go to their beach. So
They
the
want to
answer
do
is
other things in the weekend, don't they?
yeah.
Not
And
mode.
four-bedroom houses rent for easy as well. 3-bedroom sells rents for easy as well. So that's what the buyers are looking for. They're looking for 1, 2, 3, and 4 bedrooms. And in fact, when you got people coming from overseas, what they do is when they come here, they look for bigger homes because they have their parents to look after. And actually, it's happening in all kinds of. It's happening in European families. It's happening in Kiwi families. It's happening in Indian and Chinese families where the people are looking for bigger homes because they want a bedroom each for their kids. They want their mum and dad at home or their brothers and sisters because everyone's trying to save money. What's the point of
And I
living in
guess
4 different houses?
And I guess to answer the other part of that question, and it also comes down to location too, which part you wanting to develop as well. And I guess talk to a local real estate agent in that area to see, what are the demand. Look up on the real estate agents' listings, or Trade Me, and see what are the new builds in the area, or talk to a property manager, to see, what sort of families are looking for properties there and what's their demand. And like Celeste said, it could be a lot of single men.
Well, you look at Maggie. Maggie, you've got those cabins sitting around, right? How many
Yes, yeah. So that's a bit of an interim strategy because we have a broader property to develop at market peak. It just happened to be when we were buying. And then, of course, we've gone through that whole downturn. It wasn't economical to develop at that time. So to bring in a bit of cash flow, we've got little cabins in there as a temporary solution. And surprisingly, that was mostly sort of retiree age people.
And mostly men or ladies?
More ladies.
Oh, there you go. Must be the masculine thing, more ladies. But what it is, so this cabin, describe this cabin. It's a one bedroom.
Yes, they're little one-bedroom dwellings.
And how many have you got sitting there now?
5 at the moment.
5. And they're all tenanted, right? Everyone's living in there.
Mm.
Yeah, there you go. See, there's a demand for that. So, guys, if you're building houses in Auckland or anywhere out of Auckland, if you're building one bedroom houses, you'd be surprised at how fast these properties are getting rented out, and then they're going out, they're getting, people are hiring cabins or whatever because, you got single men or single ladies, they're wanting to live on their own.
Yeah.
And
If you're
it
looking
is,
to build one bedrooms to sell or rent, you'd have to work out carefully whether there's profit in it. Because of
yeah,
course, consider the cost of doing a bedroom, bathroom and kitchen, where a lot of the money goes into if you're constructing a dwelling,
yeah.
at an additional bedroom is quite cheap.
Yeah, but if you're building say 200 meter squared floor size building, and if you could fit in 8 one-bedroom units, I'm just saying, it's an example, Maggie. Um, you'd be shocked at how fast those properties get rented, and you could actually rent it to a social housing provider on a 10 or 15-year contract, and forget about it. Hand the keys over and forget about it.
Yeah. I guess as Dan was saying, whether you're developing to build or sell, rent or sell, then you want to do your research beforehand to make sure that there's demand for that, either from buyers or tenants.
Yeah, absolutely. Absolutely. So who have we got next?
Ben asks if you have a minimum percentage equity gain that you're looking for in a property to renovate and hold.
Well, normally if we are trading, we try and obviously look for 20% margin because that's a good percentage to be in. When we are renovating or when we're building to hold, we're looking for 25-30% equity gain. Otherwise, there's no point holding it. We won't sell it. So we chase, those kind of margins. Yeah.
I would say if you're holding, you're perhaps more focused on the long-term cash flow.
Yeah.
The equity gain takes care of itself over time.
Correct.
Mm.
Mm.
And if you're selling, obviously you need the profit margin.
Yeah.
Yeah. So I have a question about the cabins. No, it's not in Auckland. We're out of Auckland, and everything is correctly consented. As I mentioned, it's really in the process of a subdivision, so all the sewers and
Maggie,
power.
what do you get in rent? Like, what do those cabins rent for? Just rough numbers.
I think it's a one-bedroom dwelling. You'd probably be looking at maybe 350, 400. They're not
And
that
that's
big
in
to rent out.
Marsden.
Mm.
That's in Marsden. Like that's what I was saying. Those numbers are insane, That's what you get, like my one bedroom flats in Rotorua rents for nearly $490 to $500 a week. It's just unreal. And there's just people lined up to take them. Yeah. What have we got next?
Have you heard of Zuru Tech, a $1 billion+ company in China? New Zealand guys set it up. They have a factory that will be building and shipping houses for cheap. If so, how do you think this will affect the market, if at all?
Yeah, we have looked into the Chinese build side of things and all of that. It's not easy because what happens is you got all the materials shop in a container. You got to make sure a builder knows how to put it together. And they come into small pieces. Some of the pieces are this big. So you really got to know where to put these pieces. So yes, I mean, one thing is good to set up the factory, but the other end is just going to put them together. And it will probably, there'll be a lot of trial and error. But it's all going to happen. It's all going to happen. I don't know how the high rises are going to be built. I don't think you can import the high rises in, or you can import the materials in, but not the build. The build's going to happen here, the foundation work and all of that. But that's what I think. Have you got any more questions, Maggie? Guys, have you got any more questions
That was
before we
that was
pack up for the night? We'll probably give you another 30 seconds if there's no more questions. Thank you for listening to us. And if you do want an appointment, feel free to scan that QR code. We'll book you in. And hopefully we've entertained you. I like a bit of entertainment. And I thank you for all the questions. That was really helpful. There's about 18 to 20 questions that kept us entertained. Thank you guys. Have a good night. And thank you, Ben, for lots of questions. We enjoyed that. Yep. See you guys.
Good
Thank
night.
you. Good night,
Bye.
guys.